As of 10:18 a.m. Eastern Time on Tuesday, January 13, 2026, Envirotech Vehicles Inc., trading under the ticker EVTV on the NASDAQ, is currently priced at $3.23, marking a massive intraday surge of 0.72, or approximately 28.86%. This sharp upward trajectory is not just a random fluctuation in the penny stock market. It represents a fundamental shift in how the market is valuing a company that was, until very recently, struggling to maintain its footing in the competitive electric vehicle space. While many retail investors on the Robinhood app or SoFi Invest might have seen this as a typical low-cap rally, the reality is far more complex and involves a pivot into high-performance computing that most observers did not see coming. The immediate insight here is that Envirotech is no longer just trying to build electric vans in Arkansas. They have effectively announced a transformation into an artificial intelligence infrastructure firm through a nearly $500 million merger agreement that uses a $3 reference price for its shares. This valuation gap between where the stock was trading just days ago and this $3 internal benchmark has created a massive curiosity loop for those using Interactive Brokers or Fidelity Wealth Management to hunt for undervalued assets in the tech sector. The general expectation for a company like Envirotech was that it would either slowly fade away or continue as a niche player in the commercial electric vehicle and industrial drone market. For months, the stock languished in the sub-$1 range, leading many to believe it was a candidate for delisting rather than a breakout performer. However, the reality of the situation is that the company has used its public listing as a vehicle to acquire AZIO Corporation, a move that fundamentally changes the nature of the business. This is a classic case where the market narrative of a failing EV startup is being aggressively challenged by a new reality of data centers and server clusters. When you look at the activity on various investing sites, the sentiment has shifted from skepticism about vehicle deliveries to intense speculation about AI infrastructure. It is the kind of move that forces even seasoned professionals at Fidelity Investments or those managing Schwab Intelligent portfolios to take a second look at the small-cap landscape. To understand why the stock is moving with such intensity today, we have to look at the sheer scale of the volume. We are seeing trading activity that is nearly 90 times the daily average, a level of liquidity that usually indicates massive institutional repositioning or a retail frenzy fueled by platforms like the Robinhood trading platform. Investors who participate in self-investing or use a Fidelity brokerage account are seeing a stock that was written off now becoming a central talking point in the AI supply chain conversation. The move today is a reaction to the finalized terms of the letter of intent with AZIO, which values the target at $480 million. For a company that had a market capitalization of less than $5 million just a week ago, this is an astronomical jump in implied value. This tension between the historical price and the new valuation floor of $3 is exactly what is driving the volatility we see on the Interactive Brokers platform this morning. If we look at the mechanics of this deal, it is clear that Envirotech is moving away from its roots in heavy-capacity drones and zero-emission trucks. While they still have a manufacturing footprint and have recently secured deposits for their global drone program in Italy and the United States, the primary growth engine going forward will be the AI compute layer. AZIO brings exposure to high-end hardware like NVIDIA B200 and B300 chips, which are the backbone of modern enterprise workloads. This shift is critical because the commercial EV market has become incredibly crowded with legacy automakers and well-funded startups. By moving into the AI infrastructure space, Envirotech is attempting to bypass the low-margin manufacturing hurdles and enter a sector with much higher scalability. For those using online investing tools or looking for investment help, the question is whether a company with limited revenue can successfully execute a merger of this magnitude. The financial health of Envirotech has been a point of concern for a long time. Recent reports show quarterly revenues of around $1.8 million and significant net losses, which is why the stock was trading at such a deep discount. The short-term liabilities have frequently exceeded short-term assets, creating a precarious situation that often scares away conservative investors on Fidelity IRAs or those using SoFi active investing. However, the merger introduces a new leadership team, including Chris Young from AZIO as the proposed new CEO, which suggests a complete overhaul of the corporate strategy. This is not just a change in name, but a change in the entire operational DNA of the company. It is a high-stakes gamble that resembles the early days of other tech pivots, where a shell or a struggling entity is used to house a rapidly growing private technology firm. Please take a moment and comment below how many shares of EVTV you currently hold, or if you are considering adding it to your portfolio today. It is always helpful to see how the community is positioning itself around these high volatility moves. When we consider the broader macroeconomic environment, the demand for AI data centers is at an all-time high. Companies are desperate to access GPU power, and firms that can provide modular data center solutions are finding themselves in a very favorable position. This is why we see so much interest on the Interactive Brokers trading platform and from users of the Fidelity mobile app. People are looking for any entry point into the AI infrastructure trade that isn't already valued at hundreds of billions of dollars. Envirotech represents a microcap door into that world, albeit one with significant risks related to dilution and execution. The company recently had to adjourn its annual meeting due to a lack of quorum, which highlights some of the internal hurdles that still need to be cleared. Dealing with shareholder voting and regulatory approvals is never a smooth process for a company in transition. Historically, Envirotech was known as Adomi before rebranding and moving its focus to Class 4 through Class 6 electric trucks and vans. They had deals with school districts and last-mile delivery fleets, trying to carve out a space in the sustainable transportation sector. They even pivoted during the pandemic to manufacture isolation gowns for the government, showing a long history of opportunistic business shifts. This latest move into AI is by far their most ambitious. For someone managing an individual brokerage account or looking for the best investing sites, it is important to realize that the company has a track record of trying to follow the biggest market trends. Whether this pivot to AI infrastructure will be the one that finally sticks and generates long-term value is the multi-million-dollar question. Comparing this to larger moves we see in Tesla stock or Apple stock is difficult because the scale is so different, but the retail psychology is very similar. On the Robinhood app, traders are often looking for the next big thing, and a 30% move in a single morning certainly catches everyone's attention. Even users of the SoFi trading platform, who might be more accustomed to diversified ETFs, are seeing the headlines and wondering if this is a legitimate turnaround story. The reality often falls short of the hype in the penny stock world, but the specific mention of a $3 reference price in a legal letter of intent provides a much firmer anchor for valuation than what we usually see in these types of speculative plays. It suggests that the parties involved have done their homework and believe the underlying assets of AZIO justify a much higher stock price for the combined entity. Looking toward the future, the next few months will be dominated by news regarding the definitive agreement and the independent valuation report. If the third-party valuation confirms the $480 million figure, it could provide another catalyst for the stock to move closer to that $3 target. Conversely, any delay in the merger or issues with the NASDAQ listing requirements could cause the stock to give back all today's gains just as quickly. This is the inherent danger of online investment in small-cap companies. The floor can fall out just as fast as the ceiling can rise. Investors using Fidelity Wealth Management or high-end platforms like Interactive Brokers are likely looking at the debt-to-equity ratios and the potential for a reverse split to maintain compliance, which are always looming threats for stocks trading at these levels. The transition to a multi-vertical AI platform that covers everything from mobility to agriculture and drone logistics is a massive undertaking. It requires a level of management expertise and capital that Envirotech has not demonstrated in the past. However, with the influx of new leadership and the strategic shift towards high-performance computing, the company is attempting to reinvent itself for a new market demand. The expectation was that they would stay a small electric truck maker, but the reality is that they are now an AI infrastructure play. This contrast is why the market is reacting so violently today. For those who enjoy the challenge of self-investing, EVTV is currently providing one of the most interesting case studies in market sentiment versus corporate reality. In summary, the surge we are seeing in Envirotech Vehicles Inc. today is a direct result of the market pricing in a radical shift in the company's core